The shifting sands of business deductions. Tax laws are constantly evolving. This is especially true when it comes to deducting business expenses. The IRS regularly updates its guidelines. These updates reflect changes in the economy. They also reflect changes in how businesses operate. Understanding these changes is crucial. It allows businesses to maximize their deductions. It also helps them stay compliant with the law. Deciphering the 50% rule for business meals. Most business meals fall under the 50% deduction rule. This means you can only deduct half of the cost. But there are rules. The meal must be considered ordinary and necessary. This means it must be common in your industry and helpful for your business. The meal must also be directly related to your business. Let's look at examples. Imagine you have a meal with a client. You discuss a potential project. This meal is likely 50% deductible. The same goes for meals with vendors or consultants. If you're traveling for business and have a meal, that's also usually 50% deductible. Office snacks for employees? Those too fall under this rule. Remember, the IRS doesn't want you living lavishly on the taxpayer's dime. The meal can't be extravagant, and there needs to be a real business purpose. A quick chat about the weather doesn't count. Unlocking 100% deductibility, meals that qualify. While most business meals are 50% deductible, some qualify for a 100% deduction. These are specific situations where the IRS allows a full deduction. One example is meals provided to employees for their convenience. Think about employees working late. Maybe they're pulling a weekend shift or responding to an emergency. If you provide meals to keep them going, these can be fully deductible. Another example is meals during specific business events. Team-building activities or company-wide gatherings sometimes qualify. Finally, if you provide food to your employees as part of their taxable compensation, this is also 100% deductible. This means the cost of the food is reported on their W-2 forms. Section 4. Simplifying travel expenses. The per diem method. Tracking every single meal expense while traveling for business can be a headache. The IRS understands this. That's why they offer the per diem method. Per diem rates are set amounts you can deduct for meals and incidental expenses each day you're traveling. These rates vary based on where you travel. They are updated annually to reflect changes in costs. Using per diem rates simplifies your record keeping. Instead of keeping track of every receipt, you just need to know how many days you traveled. However, it's important to note that only a portion of the per diem rate is usually deductible for meals. The rest covers incidental expenses. You'll want to check the specific rules for the year you're claiming. Section 5. Navigating the 2024 tax law. Expert guidance is key. Tax law is complex. The rules for business meal deductions are no exception. The 2024 tax law brought some changes. It's crucial to stay informed. But more importantly, don't hesitate to seek professional advice. A qualified tax professional can guide you through the intricacies of the law. They can help you maximize your deductions while ensuring you remain compliant. Remember, a little expert advice can go a long way in saving you money and avoiding potential issues with the IRS.